Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 28th of March 2019. Thanks for joining me again this morning. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future resultados. This morning, we see that overall, where are we here? The S&P is quite stagnant. The S&P is up just a point or so, or down just a point or so. Market is really neutral this morning. The laggard today is crude down 93 cents or 1.57%, trading at 58.47 on the May contract. The British pound is also dragging down 1.13% on the futures. Gold is off again, close to 1,300, trading at 1,304 and 10 cents, down $12.80, almost 1%. Money's flowing out of those assets and slightly into equities, but not by much. The Russell's up 1.6%, 1.6 points, or 10 basis points, and the Dow is only up 11 points. The S&P 500 currently unchanged. Pretty steady. Pretty steady overnight session, just sideways mainly. Today, the main my news feed. No wonder it's been quiet. Today, we did have some releases from Europe. Business confidence from March in the Eurozone came in at 0.53 versus 0.66 expected. We did get GDP at 2.2 versus 2.4 Q on Q for the final last year, Q4. And inflation in Germany came in at 1.3% versus 1.6. We're looking for Fed's Clarita this morning, and we have some numbers. We have pending home sales a half hour after the open. We're looking for 0.7%, priors 4.6. We also have Fed's Bowman, Fed's Bostic, Fed's Williams today at 10, 11:30, and 1:15. And then we have Fed's Bullard at 6:20. So it's a Fed parade today. The Fed parade today in terms of what's ahead. I'm not seeing anything past the 10 o'clock figure that would impact the auction today. It's odd. It says GFK consumer confidence for the UK is at 8:01 p.m. this evening. I find that really strange. That's not normally at that time, I don't think. So anyway, so that's what's ahead. Yeah, it's a Fed parade. They're all coming out to tell us how rosy things are, not to worry about the fact that they took an incredibly quick pivot over the last FOMC meetings, therefore signaling to the market that things may be worse than they are, than they appear, for them to take that kind of a turn. But, you know, we'll just ignore that and just be happy with the Fed crack that they continue to dispense to institutions and banks. Anyway, so let's take a look at what we expected yesterday versus what we got. Yesterday, my scenarios were off. The expectation was for us to actually breach the high of 28.35. My expectation was to for the one-time framing to continue to rotate up. So I was looking for a higher low, higher high on the primary scenario, which did not take place at all. Secondary was looking for a breach of the high again, and then a push to the low, and finishing off balanced. Neither one of those happened. But, you know, the auction yesterday was pretty orderly. At first, it was outside in trading, basically balance trading and fading the edges. And then once it broke through the IB low, it became more of an inside out selling pullbacks into the prior low. And I did have this 2806.75 as the key target below, which it just punched right through. So the open had a bit of a drive in it. It took a while for it to break to the other side of the open. The open is this green right here. This is the open, green dots. Took it a while to breach it and come down here, which meant that it took about 20 minutes to get an opening swing, which is really long. Once we got an opening swing, I really was looking to fade the edges. So I was looking for any push down against any predefined area to trade back to mid. And if it made a newer low, then I'll trade back to mid or VWAP again, and so on and so forth. Once it breached the IB low, however, and could not come back in, it just became obvious to me that I've got to trade from the inside out, meaning trade from the inside, where price came from, that's the inside, to the outside, and look for range expansion to the downside. We had neutral days the prior days. Uh, the prior days, and this resulted in and believe it or not, despite the fact that the trade on the day before, I mean, look at this really odd shaped profile. Not going to tell you what that looks like. It just looks like it's not a butterfly kind of. It looks like a butterfly option spread being a profile, profit loss profile, and it just. But the fact is that was actually a balance profile, and we broke out of balance and continued to push down yesterday. The IB low, the double IB low projection, the double IB low projection was at 1804, and it bounced off of there to 2804, bounced off of there 2808, and continued. What we ended up yesterday with was much more something that looked a lot more like a trend day than anything else. So as the market continued, we break through 2800 and we pushed down into 2794, which was an extended target below there. Um, an extended target below there. But you look at yesterday's profile and you can easily see that there was no consensus that we were in a price discovery mood. We finished in the middle. So to me, technically, this is not a trend day down. It's not a trend day down. Trend day down finishes in the lower quartile of the range and is not able to get back up into the mid. I mean, this came right back to VWAP mid and then shifted the point of control and held steady down here. The point of control shifted down. So the point of control, the developing point of control is this white dotted line, and it shifted down here and remained here for the session. But by then, it had already hung out on top of VWAP, which is the cyan line, and the mid of the session, which is the blue line. So we came back into balance and held steady. That is not normal. Um, it is not normal trend day behavior. So what we have is a range expansion down yesterday, and I'm expecting this to trap our action going into today. I'm expecting the auction to be trapped in yesterday's range today. It has a lot to work through. Looking at yesterday's profile, traditional profile, we could see that it was very elongated and has some pretty long wings on both sides. To me, this is basically saying that it's not able to find consensus. There was a pretty healthy price discovery process that took place yesterday, and the market could not find balance and ended up setting its sights on the center and staying in the center. That's how we ended up. Carrying that into the overnight session, we immediately test down on the overnight. We push to the low end of the range, right through that 2800. Remember, 2740, 27, 2794 is a key area. 2794.75. We pushed through it yesterday by about 3 points, but this is an important area, a support area, held overnight, came right back to the mid, and then by the time the Europeans come in, right here, we start to push up, and the overnight profile is just saying that there's no consensus on price either. 241,000 contracts, 241,000 contracts traded, pretty good volume, but overall the profile showing that the market has tested across the board and is holding to the long side. So to me, this is likely to continue higher to discover price, to discover sellers, and that's what I'm expecting coming into the session this morning. So what do we have? Let's kill these. So what are we looking at in terms of, come on, these Windows notifications are coming in furiously. What do we have in terms of what we're expecting for today? Remember, we do have a number a half hour after the open. Pay attention to that. And then we have Fed speakers. They shouldn't have that big of an impact on the auction, but the market's paying very close attention to the yield curve. Everybody out there is becoming an expert on the yield curve currently. But overall, we're opening on top of yesterday's close, yesterday's point of control, near Tuesday's low, on top of yesterday's mid, and on top of yesterday's VWAP. Okay, and then the overnight point of control is just beneath us. So there's quite a bit going on here that says we are stuck in the middle. Okay, so when we're stuck in the middle, if we trade enough, and that could happen at any moment, if we trade enough, then we have enough fuel. We've gathered enough gunpowder to shoot off and spring in a direction. However, given how we open, expecting an open auction out of range, I'm looking for it to dip back down, test this 2806. 2806, if you recall, held the low 2 days ago, held the low last Friday. Okay, pretty important area, the stock zone here, 2806.75. I'm looking for a test of that to fulfill the overnight point of control stat of 85.5% historically, and I'm looking for an impulse up. I'm looking for it to get tangled up in the 16s and then push higher and then come back down. I'm expecting two-way trading. I'm expecting to trade from the outside in again, at least at the beginning of the day today, unless we get an impulse continuation that has a poor pullback. If you don't understand what that is, ask. Probably best to join Convergent so so you can be part of the conversation. There's an AMA for those Convergent members who are part of Convergent. There's an AMA today, by the way, at 1 o'clock Eastern. It's not a study hall day. We're having our once a month AMA, the last Thursday of the month, and that's today. Secondary tests higher, right into the 1617, impulse down, get stuck here at the overnight point of control, and then I'm looking for this to actually pick up some steam to the downside. And then if it does pick up some steam to the downside, I'm looking for 2784. 2784, 2782 as the key test area below. That's your secondary scenario. Why? Because it's rigged to continue higher in the overnight session. There was the selling yesterday had a lot more volume in it. It was more aggressive, and so if the selling comes back in, I expect the flow to be much more rapid to that side. I'm seeing that it is likely to be the downhill move. The easy slope for the market is to the downside given yesterday's action. Okay, so those are the two key scenarios. There is 3, 4, and 5. You can come up with those yourself. I'm over my time. Good luck today, and I'll catch you tomorrow. Just mind your risk. Pay attention to your risk. You only have to risk enough to find out if your idea is correct, and that's all you need to risk. You don't need to do more than that. Good luck.